Hey everyone, in this video, we're going to be talking about how you can achieve bigger risk to reward ratios inside of your trading. So risk to reward ratios are one of the key factors inside of trading, whether you're going to be a long-term profitable trader or not. I see so many people that use negative risk to reward, and I don't want you to be one of them. And, if you're not familiar with it, this is just what I mean. So a lot of people, when they go into trade, their losses will be, for example, $1,000, and their wins will be $300. So they have a negative risk to reward ratio. They're risking more than they're gaining on their winners. And that's not how you want to trade. You're setting the cards up against you, because if you just have 3 losses in a row, you're going to have to make up 10 trades just to break even. And most people are not going to be able to do that. So what you want to do is you want to have a positive risk to reward ratio, at least a 1-to-1 risk to reward. But even, for example, if I say we have a 1 to 4 risk to reward ratio, if I lose 3 trades in a row and I make the 4th one back, now we're going to be in $1,000 in profit, and we're going to cover all those previous losses. This is stacking the deck with you. So that's really what we want to achieve here. We want to have risk to reward ratios that are positive, that fit your win rate. Because, there's also an instance where, you might not even, for example, you could win, 30% of the time, which most people would look at that and say, hey, you're not even profitable. You're not winning most of the time. But if they have a 1 to 5 risk to reward ratio, they're going to be so profitable. So risk to reward is huge if you want to stay in the game long term. And if you go into a string of losses, if you have a good risk to reward ratio trade, that trade can totally transform your trading logs just like that. So, how do you achieve risk to reward ratios inside of your trade? And, what should you even be looking at? I mean, scalping, you're going to have shorter risk to reward ratios, 1-to-1, 1-to-2s, and day trading, you're going to be kind of in the middle, up to like maybe a 1-to-4, 1-to-5, 1-to-6. And swing trading, you're going to be able to have a longer, bigger risk to reward ratios. I ultimately say, as long as you have a 1-to-1 risk to reward ratio and it fits your strategy, that's great. But it really does depend on your strategy. It depends on your win rate. It depends on what your average drawdown is, what your most amount of losses in a row was. There's a lot of factors that go into what's the perfect risk to reward ratio for you. But for your strategy, what you should be doing is you should be going and back testing your own strategy and your own previous trades and seeing how much longer you could have held them. Are you leaving money on the table? If so, let's increase the risk to reward ratio across most of your trades and let's hold to them. But, the key to having a good risk to reward ratio, a big trade, and I'm going to show you this example right here. This is a trade that I did on Friday this week. It was Thursday, so it was June 15th, 2023, and you can see I did a 1-to-6 risk to reward ratio trade on this, and I had no drawdown, and it even went on to being a 1-to-9.4 risk to reward ratio later on throughout the day. So, if you want to achieve risk to reward ratios like this, the first and key step out of any big risk to reward ratio trade is you need to have a trend. Trend is your friend. That is the key step here, because we cannot have large risk to reward ratios without being in a trend for a long enough period of time. You don't have to be in trades for days or weeks or months, but even this trade, we were in this trade for, you can see 9:39 we entered Eastern Standard Time, and we were out by before even noon, 11:15. So this trade was a 1-to-6 risk to reward ratio, and it literally just took a little bit over an hour to get there. So just to get these risk to reward ratios, you don't need to wait there all day long. You can do it relatively quickly, but the key is you should have a risk to reward ratio set in your mind. You should go back through your strategy, through your previous trades, find a risk to reward ratio that's consistently hitting. And then the key fact after that is you need to have a plan if your trade keeps running. So with this particular setup, I trade this setup almost every single day, and I have a mechanical strategy I use, and I teach it in Fun to Profits Trading Academy. I'm not going to go over the strategy details here, but the average risk to reward ratio with this trade is usually a 1-to-2 to 1-to-3 risk to reward ratio. So you can see I extended it over to a 1-to-6. And this is what you need to have in place. You need to have your normal risk to reward ratio that you should be following. And then, hey, if it keeps trending and it's not going against you, you need to hold that trade longer. You need to let your winners ride and you need to cut those losses early. So I would have a set risk to reward ratio for your particular strategy already set in stone and in place. And if it keeps running just like this, where it's not really showing much signs of drawdown at all, then keep holding that trade. There's no reason to let go of the trade if it keeps going in your direction and it's not pulling back really at all, showing any significance of a reversal, then you shouldn't close out the trade. And I want that to be set in stone for you guys. And you want to have the regular risk to reward ratio, but you really should look at, again, like if they keep running, you need to follow that trend. You need to hold on longer. And that's what's going to get you to these trades where you're going to get a 1-to-6, a 1-to-8 risk to reward ratio. It's not going to happen all the time, but a couple trades like this per month is what's going to set you apart from being super profitable and break even, a little bit of profit, a little bit of loss, kind of in the middle. To really get those results that you want over a long period of time, you need to have some of these bigger risk to reward ratio trades. And this is what's going to set you apart. This is what's going to push you to that next level. A lot of times trading, it isn't going to be just a straight, consistent uptrend. A lot of times we're going to be kind of up and down, maybe a little bit of profit, maybe a little bit of losses. But what really sets it apart is when you have these bigger risk to reward ratio trades, you could make a couple trades and this could totally exponentially grow your accounts. So please, if you're in a trend and it keeps moving in that trend, it's not showing signs of reversal, hold on to them longer. And you'd be surprised how much more profits you can get out of these trades. And even this trade, for example, I exited this trade too early. I even thought, hey, we've been in this trade for a little bit over an hour. this thing just keeps moving. It's moved over, 300 points by now. I don't think it's going to keep going. And I shouldn't have. I should have followed my own, like I'm telling you guys right now, I should have followed. I should have kept holding this trade even longer. But again, I moved this from a 1-to-2 risk to reward ratio to a 1-to-6 risk to reward ratio. So that's already a huge increase. But again, if I would have just stopped out at a 1-to-2, I would have been right about here. This is how far I would have gotten. It would have been straight towards my profit. And look it didn't stop. It didn't even halt until we got another 100 points out of it. We didn't stop, halt at all until we got to a 1-to-4 risk to reward ratio trade. So all I'm saying is have something in place that you can use for your confluences to hold on that trade longer. If it's not coming back at you, it's not going into drawdown, then keep holding that trade a lot longer. And one of the tools that I'll use is a 10 moving average. You can see it right here. A lot of times when we go into a strong trend, we follow this 10 moving average. We're going to come down sometimes and we're going to tap on it, but you can see here, we tapped on it, we rejected right off of it, showing great signs. We actually broke the previous high, which is great to see. And then we did have some drawdown again, but it didn't break these previous lows. It didn't change. It didn't have a changing characteristic here. It didn't have a break of structure. So again, once it comes back up, breaks the structure, and we keep breaking structure on the way up. That's what you need to do. You need to have some sort of system in place. And for me, it's using that 10 moving average in the market structure just to realize, hey, this trade is going in our direction. It's not going against us. So the most logical explanation here is just to keep holding this trade longer. So that's really it. If you want to have bigger risk to reward ratio trades, you need to have a risk to reward ratio that you're going to be using on a consistent basis, already set in stone. And then if it keeps moving, you need to have a plan. If this trend keeps moving, it's not showing any signs of drawdown, it's not coming back down to you, it's not breaking structure in the opposite direction, changing the characteristics. If it keeps moving in your direction, you need to have something to hold you in this trade longer. And for me, it's the 10 moving average. So look back through your strategy and try to find something that when you get into these tight, really sharp trends, what kind of moving average, what kind of confluence is going to help you to be able to hold these on longer, because ultimately that is the secret. You need to have a trend and you need to have some sort of confluence that's going to let you hold these trades out longer. So this is how I get bigger risk to reward ratio on my trades. And I hope you can start to, be a little bit more flexible with your trading plan to hold on to these winners just a little bit longer so you can multiply your gains just like this. If you have any questions, just leave comments down below. And if you're wondering, what strategies we're using, especially like this one right at the open, you can always find them at Funded Profits Trading Academy. And if you're interested, you can always just go down to the link down below. You can book a call with us and we'd be happy to talk more about our strategies and what we do with funded trading accounts, so you can get access to 6 figures or more in trading capital. Again, just to excel and let you use more leverage so you can progress further and faster inside of your trading journey. So if you have any questions, leave them down below. And if you like this kind of content, please subscribe and leave a like, and I'll see you on the next video.